Hey everyone, welcome back to Corporate Decoder, the place where we break down the suits and ties to find out what's really going on behind the corporate curtain. And let's just say our subject today might be selling more than just shiny stocks. Today we are diving into BioSig's Technologies Inc.'s latest report, a document that tells us about some pretty important deals they've been making. Think of it as a business update that tells you what happened yesterday and what's coming next. BioSig is a company that's been involved in the healthcare technology space, aiming to improve patient care through innovative solutions. They've had their share of ups and downs, and like many companies, they often need to raise money to fund their growth and operations. This report is mainly about a big fundraising event, a public offering, where the company sold more of its stock to the public. They teamed up with Clear Street LLC and Needham & Company, acting as underwriters. These are like the facilitators of the deal, helping to sell the shares and making sure everything is above board. The deal itself was pretty significant. BioSig agreed to sell over 3.8 million shares of its common stock. The price for each share was set at $3.90. This means they were looking to raise a substantial amount of cash to fuel their business. So what does this $3.90 per share translate to in real money? Well, looking at the numbers, they were aiming to bring in around $15 million. That's a good chunk of change for any company, and it tells us they have plans that require some serious investment. Now, here's where it gets really interesting. What are they going to do with all that money? The report says they plan to use it for a few key things. First, they're going to buy gold bullion. Yes, you heard that right, gold bullion. Yes, you heard that right, gold bullion. Yes, you heard that right, gold bullion. This is quite unusual for a technology company, and it suggests a rather unique strategy to preserve value or perhaps as a hedge against market volatility. They also mention using the funds for working capital, which is pretty standard, meaning they need cash to keep the lights on, pay employees, and cover day-to-day operations, and of course for general corporate purposes, anything and everything else that keeps the business running. This filing also touches on the history of their registration statements. This is like saying they filed the necessary paperwork with the Securities and Exchange Commission, or SEC, multiple times and made some adjustments along the way. It shows a process of compliance and refinement before they could go ahead with this offering. The agreement itself has all the usual clauses you'd expect in a deal like this. There are promises and guarantees from the company to the underwriters and vice versa. A particularly important part is the lockup agreement. This means that certain people within the company, like executives and major stockholders, are restricted from selling their shares for a period of 90 days after this deal is finalized. This is done to prevent a flood of shares hitting the market right after the offering, which could drive down the stock price. This reinforces that not only the company but also its key people are committed to stability for a period after the offering. It's a way to show confidence in the company's future and prevent immediate selling pressure. Beyond the specifics of the stock sale, the report also mentions some related announcements. These are typically press releases that inform the public and the market about what's happening. So the day the deal was struck, they also put out a press release to let everyone know about this big fundraising effort. They went a step further and announced the price too. This is crucial information for investors who want to know how much they might have to pay for these new shares. And then a couple of days later, once the deal was officially done, they announced the closing. This signals that the funds have likely been transferred and the new shares are now in the hands of investors. All these important details, the underwriting agreement, the opinions on the shares, and the press releases are filed as exhibits. They are the supporting documents that prove everything being reported is accurate and official. Let's look at what's registered. The company's common stock par value, $0.001 per share, is currently trading under the symbol BSGM on the Nasdaq Capital Market. That's a crucial detail for anyone looking to buy or sell shares. And finally, the report is signed off by Carl Henry McPhee, the Chief Executive Officer. This signature essentially means the company is confirming the accuracy of everything contained within this report. Now let's talk about what this all means for BioSig Technologies. The company is actively seeking capital and has successfully raised about $15 million. This infusion of cash is vital for any company, especially one in a technologically driven field like healthcare. The willingness of underwriters to facilitate this offering and the execution of lockup agreements by insiders suggests a degree of confidence in the company's prospects. However, the decision to allocate a portion of these funds to gold bullion is certainly a talking point. while it could be a prudent strategy to protect against economic uncertainty, it also raises questions about the company's core business and its immediate growth plans. Is this a sign of strong internal confidence in their technology or a signal of caution about the broader economic environment? It's a bit of a mixed message. The company is betting on its ability to execute its plans, whether that's advancing its technology or managing its newly acquired gold assets. The success of this offering ultimately hinges on how effectively they deploy this capital and whether it translates into tangible growth and value for shareholders. Overall, BioSig Technologies appears to be navigating a path that combines technological development with a somewhat unique investment strategy. The key will be transparency and execution. For now, they have the funds and the market is watching to see what they do next. What's your take on BioSig's strategy, especially the gold bullion part? Let us know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more insights into the world of corporate finance. And don't forget to join our Discord community, linked in the description, for more discussions and exclusive content. Thanks for tuning in to Corporate Decoder. See you next time.